You guys, this is absolutely bonkers and possibly some really good news for the housing market in the United States. Today's video, and by the way, welcome back to Real Estate Mindset. Today's video is about Blackrock investments losing billions and billions of dollars and whether or not that's a good thing for the U.S. housing market. Now, we're going to go over three things, okay? Number one, we're going to talk about who is Blackrock, who are they, what do they do? Number two, what happened to them? And number three, whether or not that's good news for the housing market. Now, personally, I believe it's good news, but we're going to dig into some data and we're going to dig into some articles and find out as a group. Now, as always, guys, if you like this content, please like this video, please subscribe to my channel and comment below. I definitely learn a lot of things from the people that comment. I've actually done a few videos based on the comment. I look at us all like a community. So let's do the first thing right now. So the first question is who is Blackrock? What is Blackrock? Now, Blackrock is the #1 asset manager in the entire world, and I believe their central headquarters out of New York, so they are a U.S. company. So kind of, you know, the bad things about them losing so much money is probably going to be the stock market, but they are the #1 asset management company in the entire world. So let me bring up this article for you right now. All right, guys, so now here's an article from Nashville Business Journal, and this is what I'm going to read to start out, okay? Now, house price, this is about Blackwater affecting the housing market, and that's kind of where I kind of, you know, the niche I want to stay in and the lane I want to drive in, but all of these things that I'm talking about, I believe are going to have a big effect on the housing market. So let's go. Okay, now, high housing prices have been driven in no small part by institutional investors. So I don't feel bad. To be honest with you, I do not feel bad for Blackrock. Here's why. Companies like Blackrock buying up blocks of single-family homes to use as rental units and outpricing would-be buyers. A recent study from digital real estate agency Redfin found that 18.4% of homes, that's crazy, almost 20%, or 80,000 properties purchased in the fourth quarter of 2021 were bought by institutional investors. Okay, and you guys can read more from Redfin. So here's the thing, you guys. Not only, and this is why I'm talking about Blackrock, not only are they the biggest financial asset manager in the world, they have bought up so many properties in the U.S. housing market and taken those options away from potential homeowners. And what I think that has done is it's messed us up, right? Now rent is higher, now home prices are higher, and you guys know that in certain metro areas, actually 50% of the houses have been purchased by institutional investors. Now, it's not just Blackrock, it's obviously Zillow, who got burned, Redfin, and places like that. But it's very important to note that that article not only said that they are purchasing properties, but entire blocks. So I believe that these financial institutions are actually going to new home builders, and immediately out the gates, they're purchasing these new home builds and renting it out immediately, which in turn is driving up prices, is driving up rent, and it's removing the supply that potential first-time home buyers would be able to buy. So I don't have a lot of pity for them. In fact, I kind of think they need to get out of the market to give Americans and families the opportunity to purchase a home of their own. Everyone's going crazy right now because they cannot find homes, and it's companies like Blackrock that are one of the causes of that problem. Now let's go to the second thing right now. What happened to Blackrock? All right, guys, now here's an article from Yahoo Finance. I love Yahoo Finance. They got some good stuff on there, and it's usually pretty reliable for the most part. Now let's read this. Blackrock funds have taken a $17 billion loss as a result of its Russian exposure. Holy smokes, you guys. Did you guys know that this American company was so heavily leveraged in Russia? I didn't. But as of a few days ago, this article came out, $17 billion lost exposure since Putin's invasion of Ukraine began in late February. And it's not the only Western bank or asset manager set to take a sizable hit. Let's continue. International banks are owed roughly $121 billion by Russia-linked entities, according to the data from the Bank of International Settlements. And because of the recent decoupling of the West and Russia, clients may not get most of that money back. That's insane, you guys. So basically, Russia is like, if you're from the West, if you're from the United States, we don't owe you nothing. My gosh. Okay, I don't know if we call that greed or what we call that from Blackrock, but it's not good for Blackrock. Let's continue. BlackRock clients held around 18.2 billion in exposure to Russia-linked assets. As of the end of January, the firm revealed the world's largest asset manager declined to break down its Russia assets for the Financial Times, but its largest Russian exchange-traded fund, the iShares MSCI Russia ETF, saw its value plummet from 600 million at the end of 2021 to below 1 million this week. That is absolutely astonishing. So let's talk about that real quick. So what does that mean for BlackRock? What it probably means for BlackRock, other than they lost billions and billions of dollars, hey, stop being so greedy, BlackRock. But what it essentially means in my eyes is BlackRock is probably going to tighten up. They're probably, in order to recoup to $17 billion in losses, they may have to sell some assets, you guys. Guess what kind of assets? They may have to sell some homes or some apartment complexes that they owned, and what that will do is it will give us more supplies in the housing market and give us more opportunity, right? But when all is said and done, it has drastically decreased their ability to purchase more homes. And that's what I want to look at. And number two is they're probably not going to be able to purchase too many more homes in the U.S. housing market because we're not in this high equity growth in 2022. And quite frankly, not only is Zillow out, I think BlackRock's out now. But let's talk about number three. What does this mean for the U.S. housing market? Overall, what I think this means is, I think it's good news. I think, like I said, BlackRock is going to have to sell some assets to recoup some of that billions and billions of dollars they lost. And when they sell their assets, if the assets are homes or apartments, what that will do is not only give us a higher supply of homes for people to buy, but it should also potentially decrease rent. I don't know if it's going to decrease rent exactly, but it should potentially. So I want to bring up an article that just came out 1 hour before I started recording this. Take a look at this. Boom, look at the headlines. BlackRock sells West Village apartment for $100 million, okay? It's already happening, you guys. It's already happening. Now let's take a look. Midwood Investment and Development has acquired the Candela Tower, a multifamily property located in blah, 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 for $100 million. A source tells Blvd.com BlackRock was the seller of the 160-unit property. So that was as of 1 hour of doing this video. So they have already started selling property. And I believe that as the war continues, as BlackRock continues to lose money, and they've lost a lot of money, they are going to continue to put those homes back on the market because they probably made equity. Now, if they are desperate, you guys, if they are desperate to get money, they may put those homes on the market at a loss, right? They may actually lose money compared to what they bought them for, which again is going to give us more inventory that is so desperately needed if you are trying to buy a house right now. So I want to go over my overall opinion. So my overall opinion is it's probably bad for the stock market, okay? I really try not to report on the stock market, even though I'm investing in the stock market. And as you guys know, as of Thursday and Friday of last week, my portfolio took a 20% hit. That has gone up a little bit today and yesterday by about 7%. So I've recouped a lot of that money. Federal Reserve is meeting today about interest rates. So that will probably help. And what I'm seeing in the stock market is fear. There's a lot of fear, and I believe that's what's really driving prices down. We're not in a recession yet. I'll do another video about recession, but here's my overall thing for the housing market. I think this is great news for the housing market. This thing with BlackRock is basically another leg kicked out from underneath the house of cards that is our housing market. So if you've been waiting for news, if you've been waiting for homes to get on the market that you can afford, if you've been waiting on options of homes that you love, sit tight, you guys. It's already happening. Now, as you guys know, I believe the fourth quarter of this year is going to be time to buy. It's going to be the start of a cool down, the start of a home crash, and it's looking more and more like that as more data comes out, as more news comes out. And I believe the situation with Russia is accelerating that. So overall, I think you should do what I'm always telling you to do if you want to buy a home. Save your money, build your credit, Be patient, buckle down, and enjoy your family, because it will be our turn to buy soon. And as always, guys, thank you for tuning into this video. I'll see you on the next video. Good luck out there, and I hope you win.